Warm welcome, everyone, to this deep dive, and a special hello to our Excel Edge Realty family. I'm Lex.
And I'm Vera. Great to be here on the Excel Edge podcast show.
Fantastic to have you. Today, we're really zeroing in on something vital for all of you aspiring Filipino first-time home buyers out there.
And also for our savvy property investors, it's a topic with wide reach.
Absolutely. We're looking into how these big shifts in global trade are, actually shaping the real estate market right here in the Philippines. Our mission really is to unpack what these international economic currents mean for your property goals, whether that's getting your first home.
Or maybe strategically growing that investment portfolio.
Exactly. Right here in the Philippines.
Yeah, we'll be digging into potential changes in construction costs, for one, and the strength of the outsourcing sector, the BPO industry, which, drives so much demand.
Right. And also how the Philippines is kind of positioning itself in this bigger global picture.
Think of this as your insider briefing. We want to cut through the noise and give you what really matters if you're looking at property in our, pretty vibrant market.
Definitely. We're basing this on some recent analysis we found, specifically an article from BusinessWorld Online that really takes a close look at these dynamics.
Good source.
So let's dive in and see if we can uncover some insights to give you that edge in the Philippine real estate market. Okay, so let's unpack this. The article that talks about how even just the anticipation of things like tariffs.
Like the ones proposed by President Trump.
Right, how that sends ripples through global markets. But what's interesting is how the Philippines is trying to, maybe capitalize on this.
Indeed. It seems the Philippines is actively working on a strategy to become a more prominent alternative manufacturing hub. They sometimes call it a China plus one destination.
China plus one, meaning not just diversifying from China, but even from the first alternatives.
Exactly, like Vietnam or Taiwan. The idea is to attract businesses looking to spread their operations.
And is it working? The article mentioned some growth in foreign direct investment, didn't it? Specifically in manufacturing.
Oh, absolutely. Big time, actually. In 2024, something like 95% of the total foreign direct investment went straight into manufacturing here.
95%? Wow.
Yeah. And get this, the sector saw a compound annual growth rate over 38% between 2021 and 2024.
Okay, that definitely signals some strong investor confidence. People are seeing the Philippines as a manufacturing base.
For sure.
But here's where it gets maybe a bit more complex for our listeners, especially those looking at property near potential industrial zones. Despite that positive trend, the article also flags some persistent challenges, things holding the Philippines back a bit.
Right. High electricity costs, that's a major one.
Ah, yes, always a factor.
It really is. The Philippines, unfortunately, has one of the highest industrial electricity rates in the ASEAN region. I think it was third highest, according to Department of Energy data.
Third highest. Ouch. That definitely makes it more expensive for manufacturers compared to some neighbors.
It does. It can impact, how quickly industrial development happens, or even if it's viable in some cases.
And it's not just the power costs, is it? The article mentioned regulatory stuff, too. Red tape. And perceptions of corruption.
Yeah, that's another layer. The country's ranking in global ease of doing business indexes.
Yeah.
Well, there's room for improvement, particularly around bureaucracy, that red tape and corruption perception.
So those things can create hurdles for businesses, slow things down.
Definitely. They can slow down industrial growth and consequently the demand for both industrial and residential properties nearby.
Okay, so the ambition is there, becoming this alternative manufacturing hub. But tackling these internal issues like power costs and bureaucracy is pretty crucial to really making the most of it.
Couldn't agree more. It's key for sustained growth that would benefit property owners and investors.
Now, the article also touches on the Philippines export market. The U.S. is a huge customer, right? How do trade policy shifts affect that?
Yes. The U.S. is the single largest export market, took nearly 17% of all exports in 2024.
17%. So, yeah, that concentration makes the Philippines a bit vulnerable to potential U.S. tariffs.
It does create some susceptibility, but it's also worth noting the export portfolio isn't, entirely reliant on the U.S. There's reasonable diversification.
Yeah, like Japan.
China. Exactly.
Okay.
Japan, Hong Kong, China. They're also significant markets. So that provides a high degree of resilience. A buffer, maybe?
Okay, that's good context. Now, let's switch gears a bit to something that might seem less direct, but could really hit home for listeners thinking about building or investing in new construction materials, specifically steel.
Ah, yes. This is where you really see how interconnected global trade is. It's fascinating.
So the Philippines imports a lot of steel, right? And a chunk of that comes from China.
A significant quantity, yes. And meanwhile, the U.S. has really cut back its steel imports from China because of existing tariffs.
Okay, so help me connect the dots here. How does the U.S. buying less Chinese steel affect prices here in the Philippines for our real estate market?
Well, think about it. If U.S. demand for Chinese steel drops, where does that steel go? Chinese producers need to find other markets.
Ah, okay. And the Philippines, being a major steel importer.
Could become one of those alternative destinations. So you could see an increase in the supply of Chinese steel coming into the Philippine market,
And more supply usually means...
potentially lower prices.
So, wait, despite all the global trade tensions, Filipino developers, maybe even individuals doing renovations, might actually see lower steel costs.
It's a definite possibility. Steel is fundamental, especially for bigger construction projects, industrial infrastructure, high rises. Lower prices could make projects cheaper.
That's a potential upside then. Could help keep project costs in check.
Precisely. And given how much steel goes into construction here, cheaper steel could actually encourage more building activity.
Including maybe those new industrial zones we talked about?
Exactly. It aligns with the manufacturing hub goal. And more construction activity could, eventually ripple through to property values and investment opportunities in those areas.
Interesting. Okay, let's shift focus again. The business process outsourcing sector, BPO. Huge part of the economy, massive driver for office space, and even residential demand in certain cities. How's the trade landscape affecting BPO?
Right. Well, BPO services aren't hit directly by tariffs like physical goods are,
Uh-huh.
but it's not totally immune either. It's still somewhat vulnerable because, well, around 70% of the demand comes from US-based clients.
70%? Wow, still very US-centric.
Very. So the general geopolitical uncertainty from trade tensions creates a risk of reshoring US companies bringing jobs back home.
Or nearshoring, moving them closer, like Mexico.
Exactly. So there's that underlying vulnerability.
And the article suggested maybe slightly slower growth for BPO in 2025? Still growing, but maybe not the explosive rates we saw before.
That seems to be the forecast, yes. Growth, but perhaps more moderate. Which raises a really important question.
Which is?
How does the Philippines keep this vital sector strong and resilient, especially considering its impact on the property market?
Okay, so what are the key strategies there? What did the article suggest?
Well, it highlighted two main things. First, circling back to those structural issues, actively tackling the high electricity costs to make the Philippines more competitive overall.
Makes sense. Keep operating costs down.
Right. And second, strategically investing in upskilling the workforce,
Yeah.
making sure they are, quote, AI ready.
Ah, AI. That's a big one everywhere. The article mentioned Filipinos are actually pretty quick to adopt AI.
Yeah, there was a study mentioned indicating a relatively high adoption rate among knowledge workers here. They seem quite adept at integrating AI into their work.
So the potential is there to leverage that.
Absolutely. By focusing more on AI training and maybe helping the sector move up the value chain into more specialized areas like healthcare, finance, data analytics.
For skilled jobs, basically.
Precisely. That helps ensure the workforce stays competitive, adaptable, even with evolving tech. And that is crucial for keeping the BPO sector strong and continuing to fuel real estate demand.
So, okay, boiling it all down for our listeners.
Mm.
Whether you're looking at your first home or you're investing in property, these global trade shifts are definitely creating a mix. There are potential challenges, yes, but also some maybe unexpected opportunities in the Philippine real estate market.
Absolutely. And really understanding these underlying economic forces is, well, it's just crucial for making smart decisions aligned with your financial goals.
Yeah, you need that context.
Definitely. By keeping an eye on these global trends, watching how the government tackles those structural issues we talked about, and seeing how key sectors like manufacturing and BPO evolve, you get a much better picture for navigating the market effectively.
So, wrapping things up a bit.
Yeah.
As we've explored, this whole global trade situation is creating some interesting ripples here in the Philippine real estate scene.
Yeah, we've seen the push for the Philippines to be a key manufacturing hub.
Right, and the potential for maybe lower construction costs because of shifts in steel supply.
And also the ongoing importance of the BPO sector, even if growth might be a bit more moderate going forward.
We also touched on, and it seems really critical, the need to address those underlying challenges, electricity costs, regulatory hurdles, to really grab these opportunities.
Couldn't agree more. And for BPO, that focus on upskilling, embracing AI, seems vital for the future.
We really hope this deep dive has given you some valuable insights into what's shaping our market, hopefully empowering you with, good knowledge as you navigate your property journey with us at Excel Edge Realty.
And remember, for more in-depth analysis, or if you want to talk through your specific property goals with our team, please do visit our website.
That's right, you can find us at www.exceledge.com/ph.
So maybe a final thought to leave you with. Considering these global shifts we've discussed, how can the Philippines really leverage its strengths, like, its young, dynamic, tech-savvy workforce?
Good question. How can I use those strengths not just to kind of weather the changes?
But to actually become a leading destination for both industry and investment, which would ultimately benefit homeowners and investors alike.
Yeah, definitely something to think about as you consider your next moves in the real estate market.
Food for thought.
Absolutely. Well, thank you so much for joining us for this deep dive. If you found this helpful, please do click that follow button.
And maybe share it with anyone else you know who could benefit from this knowledge.
Until next time, from all of us here at Excel Edge Realty.